Today we're going to talk about what I consider to be the #1 critical factor determining your success in trading, and that's defining your risk. Stay tuned, we'll be right back. Good day traders, I'm Stacy Burke from Stacy Burke Trading. Today we're going to be talking about defining your risk. This is probably the biggest lesson that I've had to learn, and it's a daily battle in terms of preserving your capital, making sure you stay in the game, and financially making sure you don't blow up your trading account. Now, I've done this in the past. I've blown up a few small trading accounts, and as I've talked about in the other videos, probably one of the biggest lessons I had to learn was how to take a loss. Cutting losses is what will ensure the professionals or the successful, profitable traders have learned to cut their losses. And sometimes that's come at the expense of experiencing huge, catastrophic financial loss. And then on root of that, learning that the only way to ensure your success, no matter how you're trading, whether it's day trading, end-of-day trading, swing trading, you know, whether you're trading on market profile, moving average crossovers, or just price levels, whatever, however, there's hundreds of ways to trade the markets. All of them can be traded successfully by different individuals. But ultimately, the only thing that determines their success is the ability for them to define their risk, predetermining their risk, and the ability to cut the loss when the trade hypothesis that they entered into the market on is proven to be wrong. Professionals or profitable traders will cut that loss immediately without any emotional attachment to the pain or the emotional ups and downs of experiencing that loss in their trading account. They don't have any issue to try and prove anything right or about winning or about making money. They're there to preserve their trading capital and go on to the next trade. Consistent methods to cutting losses is the one thing that you need to have. However you're trading, you need to either have a technical level placed into the market that will be automatically executed by your trading platform to take you out of the market when that stop loss is triggered, or you need to have the ability emotionally and mentally and the discipline to execute that trade yourself manually if you so choose. Now, I think the second option there is where most traders run into problems. They'll end up holding on to a losing trade. In some cases, they'll average into a losing trade. They'll add good money to bad money. And even if the market reverses later on and would have proved you right, the original hypothesis that you entered into the market and had a technical stop level at, if you didn't execute that trade, occasionally the market rewards bad behavior, but ultimately it will probably end up you'll probably end up blowing up your trading account at some point because you're exercising bad judgment repeatedly into the market, and the market is a stern taskmaster. If you're on the wrong side of the market or wrong side of the order flow and your stop loss is hit, you have to take yourself out of the market. And again, you know, if you're swing trading, you place limit orders into the market, you're automatically stopped out. And sometimes the most painful thing to see is the market stops you out, you come back and check the screen, and it's immediately gone back in the opposite direction, in your original trade entry direction. But that's irrelevant because the whole issue at hand is preservation of your trading capital. You had a hypothesis upon entering into the market. If that technical level was hit where you predetermined that invalidated your original reason for entering the market, so be it. You're on to the next trade. A key component to defining your risk is your position sizing and your money management, but it doesn't matter how you're trading. If you're following your trading plan in terms of your exit and entry strategies, the only thing that will determine your success long term, if you have a positive expectancy, is the ability to define your risk. So if you don't, at some point, and you're wrong in a big way, you're going to be forced to liquidate the position from the extreme drawdown that you're having or the emotional pain that you're experiencing, or you're going to get a margin call. And at that point, you either have to exit the trade or add more money into your trading account. So when this happens, that's not a problem with your technical ability, it's a problem with personal psychology. And if you don't work on that, you know, I talk about this all the time with my 7-step daily routine. Create a vision of the trader that you want to become. Goal setting, journaling, accelerating your learning, working on your mindset, and bulletproofing yourself daily for success. even though I work on this every single day, there's always the challenge, which is why I move the bulk of my trading to swing trading or end-of-day trading, because my orders are placed automatically into the market and I'm hands off. That way I know that I can protect my trading account, I can grow it, doesn't matter to what size, and I can still manage that capital appropriately and not be on the screen. Most of my errors occurred being at the screen, whether it was trying to day trade or even on the hourly system. I still found myself making mistakes, and the number one thing I'm trying to do is eliminate where my mistakes are occurring, work on the areas that I'm doing well, and stop doing the things that I wasn't doing so well. The number one rule in trading that will traders search for the holy grail of entry and exit strategies. I talk about studying Peter Brandt, Brent Penfold. There's a host of great traders out there to learn from, but the biggest thing that you can do to improve your trading immediately is to be consistent at defining your risk and cutting your losses. So hopefully you got some value out of today's video, traders. Work on that. Get my 7-step daily routine for high-performance traders. Continue working in a direction of constant progress, and as I've said before, trade smart, protect your capital, get better at that, trade bigger, and live the dream. Have a great trading week, and may the markets go with you.
Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.